The beginning of the year has been very complicated for financial markets. It's particularly true for the first half, with a very bad performances of all asset classes. We had a small rebound at the very beginning of the summer, but it didn't last. And so the year is very, very difficult. And it's not really surprising when you see the economic environment with all major economic area facing very specific issues. So it's true that we had good news regarding inflation in the US. First, we had the fact that bottlenecks have declined, the fact that also gasoline prices have declined. So that's good news. Does it mean that it's done, the fight against inflation? We don't think so. In fact, when you look at inflation in services, it's still very strong, not to say still accelerating. If you look at wage inflation, it's also very strong. So we think the Fed is not done with the issue of inflation. Yeah, we think that the Fed won't be able to avoid a recession, in fact. We think that simply a soft landing won't be enough to cool down inflation and to go back to 2%. So it means that probably we'll have a recession in the next few quarters.
The labor market is currently very tight in the US. If you look at the number of job offers per unemployed person, the Fed has told us that they want to bring down this ratio between job offers and unemployed people. So they have to slow down the economy to do so.
First, it's important to have in mind that the Eurozone did very well during the first half of the year. It was a surprise with strong GDP growth and a decline in the unemployment rate. It's true that we have this energy crisis, which is very, very significant. So far, the economy is okay, but probably the overall impact of the acceleration in energy prices is not done, and probably we'll see a further slowdown of the economy. And so this is really, really challenging for the Eurozone, and the likelihood to have a recession is quite high, we think, in the next few quarters. And if we do not have a recession linked to the energy shock, we will have another one linked to the US recession. For the central bank, it's a very complicated situation because they see that they have a big issue with inflation, as mentioned, and they know that they will have an issue with GDP growth, as I mentioned. And so they will have to decide what to choose. Will they fight inflation? Will they try to support growth? Quite clearly, we understand that they have decided to fight inflation first, and only when this fight will be won, they will decide to help the economy. And so the environment is not very, very positive, with a recession coming, very likely, and a tightening monetary policy.
China was a key positive factor after the 2008-2009 recession. The country stimulated its activity quite a lot, and it had a big impact all over the world. Right now, we think that we are in a different situation. When you look at China right now, China has to cope with two shocks. The first one is a zero COVID policy. And the second one is the slowdown and one would say the collapse of the residential sector.
You can see that all activity indicators in the residential sector are declining very quickly. So as you know, this year is a very specific year for China because this is the year of the Communist Party Congress. So they want to be able to show very good figures, very good indicators. So they are supporting the economy. But we are not sure they will be very, very effective. In fact, they have been very effective to support the economy 15 years ago during the Great Crisis. And we have seen that recently, each time they try to support the economy, the positive impact was smaller and smaller. And so we are a little bit worried that this time the positive impact won't be as big as they expect, in fact. The coming months for the financial markets won't be very, very good, probably. Clearly, central banks are going to tighten monetary policy more than market expect. So probably it means that the long-term interest rates are going to go up. And when you look at real interest rates, they are not very high now, so they could go higher, definitely. And if you look at risky assets, it can be credit, it can be equities, definitely an environment when you expect a recession is not good for them. And we think that these asset classes are going to decline in the near future. The question we are asked very often is, when will we see a low point on these asset classes? And the answer is very complicated, of course. But what we have noticed is that in the past, you never had a rebound of risky assets less than 3 months after the beginning of the recession. And so as we expect a recession probably in 2023, it means that we can't have a rebound of risky assets before 2023. So we are still negative regarding risky assets.